80 days ago, I invested $2,000 into a project called Yield Nodes. After 4 weeks, it was going pretty well, so I invested another $3,000. Since making my initial investment, I've been making 8% per month. 8% is a good return for the stock market on an average year. Right now, we're making 8% per month. In January, I made $190. In February, I made $422. And in March, I should make another $440. And at this rate, by the end of this year, I'll have made $7,500 off my initial $5,000 investment. In this video, we're going to explain exactly what Yield Nodes is. We're also going to talk about the pros of Yield Nodes, talk about their team, the revenue model, and a few other things that are really nice to see. And we're also going to talk about the cons and some of the risks that come along with Yield Nodes. We'll also talk through my strategy, and we'll also show you how you can invest in Yield Nodes yourself. If you're new here, my name is Jason, and I'm on a mission to make $5,000 of monthly passive income per month by the end of May. I like to break these really complex crypto things down into something very simply so you all can understand and hopefully learn from my own experiences. I also like to share all of the dollars and cents so you know exactly what my returns and losses are. If you get just a little bit of value out of this video, please hit that like button. It does wonders for sharing this video with other people so that they can learn as well. And if you're interested in more videos like this or my passive income journey, go ahead and hit that subscribe button. All right, let's get into it. Let's talk about what Yield Nodes actually is. For starters, Yield Nodes is a node project like the thousands of others that are out there. But unlike others, Yield Nodes is an actual node project, meaning they get their money and their revenue from putting out actual nodes. They're not some type of treasury building investment protocol that a lot of these other node projects seem to be, and they're not promising some crazy high APYs either. To accomplish this, Yield Nodes run something that are called master nodes. What are those, you ask? Great question. Let's jump into it real quick. For starters, master noding is not actually mining. And the reason they're not going down this path is because they think that the value of mining is decreasing over time, which seems to make sense as more people have gotten involved. There's also some environmental concerns, but that's not the main point of this. It's also important to understand the three types of nodes that seem to usually exist in the blockchain. There are light nodes, regular or full nodes, and master nodes. Light nodes, they verify part of the blockchain for each transaction. Regular nodes or full nodes, they have an entire copy of the blockchain so they can help verify each transaction. And master nodes, they do the same thing as regular full nodes, but they also do some other things as well. Usually they're required to enable more features that go above and beyond just a regular full node. Some of those things could be like enabling instant sending of transactions, enabling private transactions, and making sure that they have a dedicated server so they're up 24/7. Now, traditionally, light nodes and regular full nodes, they're not monetized in any way. They just exist. However, master nodes, because they are kind of like the first class of nodes and they come with these extra features and requirements for someone to set them up, they are monetized through certain incentivizations by that particular project. Also, in order to set up a master node, you usually need to stake a significant amount of that native currency so that you're locking up some of the value already. And so you are already tied to the project's inherent success because you've invested a lot into their underlying currency. Okay, now that we've discussed the main concepts of master noding, let's talk about my favorite parts about this project. We're going to start with the team. The first thing I love about them is that they are fully doxed. You can see they have a listing of their entire core team right here on their website, and they even included their LinkedIn profiles. It's rare to find a fully doxed team in the crypto space, and even more rare where they're just saying, hey, come look at us, this is us right here. So Steve, he is their CEO and Chief Marketing Officer. And him and our connections on LinkedIn, so +1 for that. But what's not great is that there's no like noticeable or classic brands on his profile. So it's hard to say how much expertise he actually has. Let's go to Urs. He's their COO and CIO. And he seems to have a bit more of a background in the crypto space. But again, nothing name brand, so it's hard to know for sure. But he does talk about here being involved in smart contracts for at least the last 4 years or so. And apparently he's been in the IT world for 40 years now at this point. Seems like he does have some competency and some background here. A couple other folks on our team, you got Igor. He seems to have been involved in IT, particularly some Forex and smart contract stuff for the last 13 years and change. That's really great to see. And then Dima, don't know too much about him, but he seems to have worked for the same Ramarda Limited company, working on smart contracts that I believe our boy Urs was working at as well and the owner of. So they have some synergies. They've worked together for a while. That's good to know. But at the same time, the thing that they're missing here is that they don't have any name brand companies. So their core team is fully doxed, and this is a huge plus. The This usually indicates a much less likely chance for them to do a rug pull and take all of our money. I also really like that they have a very clear revenue model. They're doing one main thing here and they're doing it really well. Whereas a lot of other node projects, their revenue models are either totally obscure or don't really exist. We've looked at this with some of my other videos. Let's talk about Strongblock for a second. They're the grandfather of the node projects, and their main revenue source right now is just the maintenance fees that they charge every month for you to maintain your node. So they've got like 300,000 nodes and they're charging $15 per month. That's a nice monthly recurring revenue model for them, but Strongblock isn't really running any nodes that are receiving transaction fees or making money for the community. Now you look at a place like Thor and they're somewhere in between. They have been investing in validator nodes that are receiving transaction fees, and they're able to bring that revenue and put it back into the project. The other thing that Thor is doing is that they're building up a treasury and then they're investing into other crypto projects as well. And this is where these node projects kind of meet the VC space. And that's tough because you have to really trust that the people running these projects are good investors. And honestly, most VCs fail. So it's hard to say that any node project is going to be able to pick the right investments to make. YieldNode's revenue model is very straightforward. You give them money, they use that money to set up master nodes, and those master nodes earn fees for validating transactions and doing some other things for each blockchain that they're working on. That revenue is then put back into the project. 15% of the revenue is kept by the team, and 85% of it is distributed to the investors. The other thing that's different about yield nodes is that you don't lose your initial investment like you do in other node projects. If you want to invest in Strong, you have to buy 10 Strong tokens and then you give that to the project and you don't receive that back. You just start receiving your reward. So if you want to cash out anytime, you're never getting your initial 10 Strong back. The same goes with Thor and a lot of these other node projects. However, with yield nodes, you're allowed to cash out your initial investment and your gains. Now there's a caveat to that. Any initial investment you make is locked up for 6 months. So you have to trust that you're going to get good returns over those next 6 months. And there's not much you can do to cash those out. If you need your funds in less than 6 months, you can go through an emergency cash out process, but they're going to charge you a heavy 25% tax on that. From my understanding, the main reason they do that is because it just takes a lot of work to set up these master nodes and to take them down. They also require KYC for each investor. Now, I know some people are not going to like this, but I think we all understand that regulation is generally good for the crypto industry. And by requiring KYC as a part of being an investor in the project, it shows that they are trying to do things above board. And again, I would imagine a project that is requiring KYC and collecting all this information is going to be a lot less likely to rug than someone that's not. I also love the stability of the project. Because your investment is not tied directly to the price of any underlying coin, it gives us a lot more stability in terms of the returns. We've seen this in a lot of these other node projects, right? Strong has gone from $200 to $1,000 per token, now back down to like $130, $140. Thor's gone up to over 100, I think up to 200, and then back down to like $35. In each of these cases, any Strong or Thor node holders were really tied to the underlying price of those tokens. That's not the case with yield nodes, again, because you're just investing in having a piece of their master nodes and not these underlying tokens. One other sneaky pro to this project is that they have a Trustpilot site. Trustpilot, for those who don't know, is this big review site. People can review services and kind of like Yelp, but for all sorts of businesses, particularly on the internet. And it's just very rare for you to see crypto projects that have a Trustpilot site. You can see reviews of people reviewing their software or reviewing their project. And to boot, yield nodes has a 4.8 rating over 588 reviews. Another good sign is that Steve, the CEO, is personally invested in yield nodes with roughly 25% of his personal liquid funds in yield nodes. The other thing that's really nice is that you can make deposits in many different ways. So the barrier to entry is pretty low. Lower barrier to entry usually means higher adoption rates, which is usually a good sign for most projects. You can see here, you can use Bitcoin to deposit, you can deposit using Tether, and they have these other ways that you can even use fiat money to convert to Bitcoin within the app and make your deposit in yield nodes. All right, now we've spent a lot of time talking through the good things about yield nodes. Let's spend a few minutes talking about the bad things about yield nodes, some of the cons. But before we do that, it's really important that you go ahead and hit that like button. No, but seriously, if you've made it this far in the video, you probably like it enough. So go ahead, hit that like button and everyone in the world will be thankful for you. All right, seriously, let's talk about some of the cons. The first is that your transactions don't usually happen in real time. So whether you're making a deposit or you're withdrawing your money, that doesn't happen in real time. And part of the reason for that is that it takes them a while to manually do a lot of this stuff. So when you make your initial investment, it takes a little while for the funds to clear and for them to set up the node and get your share allocated. And same when you want to take your money out, it takes a little bit of time to remove your share from the allocation and potentially wind down a node. So it takes some time, and a lot of this stuff doesn't happen in real time. When you make your initial investment, they actually have a 7-day grace period. And they have this because it just takes some time to properly position the servers in the marketplace. And when it comes to withdrawals, that takes some time as well. So you have to request your withdrawal by the 15th of a month, and then you will receive your withdrawal by the 8th of the following month. And again, it's just because it takes time to unwind everything that they've set up on your behalf. Another one of the cons is that your money is locked up for 6 months. So while in other node projects, you're locking up your money for the return on investment period, or really just not getting that money back. In this case, you can withdraw your principal, but you can't withdraw it until your principal has been invested in the project for at least 6 months. They do have this emergency withdrawal button here that you can use. However, the catch is that it's going to cost you 25% of your withdrawal. And the main reason for that is right here. The 25% fee is also not going into our pockets. It's rather kept in yield nodes to keep the program healthy and be fair to all the regular noders who should not be penalized by dissolutions of nodes that carry their funds as well. That seems like a very fair and democratic way to approach this, and I think it makes sense. You can take your money out early before other investors may be able to take out their money, but it's going to cost you, and that money is going to be redistributed back to the rest of the investors. Another risk with this project is that they haven't been audited by a third-party firm. The reason for this is that they say what they're doing is not being done by a lot of other places, so there's not a lot of auditors that really know how to effectively audit a project like yield nodes. In some ways, this makes sense. As an auditor, if you're going to put your name on something, you want to make sure that you're confident in your answer. But at the same time, most auditors will find a way to get some of this stuff done. So I'm a little bit surprised that they haven't found a company to take this on as an independent audit yet. But we've also seen some of these independent audit companies in the crypto space audit places and still get rugged. So who knows how effective an independent audit actually would be. They did, however, do an audit last fall. And instead of doing an audit with an independent company, they actually asked their entire community if any of them wanted to volunteer to show up to audit yield nodes. They received 50 applications and randomly selected 5 people. And these 5 people happen to come from all very different backgrounds, which was really helpful as they came in to look at the code a little bit, look at the different transactions and the files, and really understand what was going on behind the scenes at yield nodes. And you had some people that understand this stuff pretty well. Angela here, she worked at BP for 20 years and was in credit risk and worked with their treasury. So that's a good person to have witnessing this. Liam seems more like an outsider, which is good to have someone's opinion that doesn't understand this stuff as much, can ask different types of questions. Josh Peach, first of all, great name. Second of all, he's been involved in algorithmic trading himself and other investment opportunities. Again, someone else that has some familiarity with how financial instruments work. And then you have Jurgen, who is apparently a Forex expert himself. Having 5 people with these different types of backgrounds is great because you're going to get a whole different set of questions from each person, and you should get a really well-rounded audit in a sense that people are going to be looking at this from a bunch of different angles. All the auditors hopped on a 10-15 minute video call with the CEO. They also got a chance to access all the admin data with the core team. And most importantly, they were able to calculate and reconcile the balances in the yield nodes ecosystem. They also offered signed statements from each of the auditors. So this is a very different take on an audit, but you have to give them credit that they're actually willing to let users come in and check things out behind the scenes. Rarely do you see that in most crypto projects. The last key risk I want to point out is that a lot of the projects that they're masternoding for are actually owned by the yield nodes team. They have a list of all the projects that they're currently in their network. What's nice is that there's a large variety of projects, so there's less risk of one project going poorly and really affecting the entire yield nodes project. However, whenever someone is doing something like this, you have to worry about self-dealing and them having too much control and not enough checks and balances in their process. But it seems that yield nodes is taking this approach because they can cut out a lot of the middlemen and they can have more control over each project's success. So the logic makes sense in a lot of ways. That means you just have to put a little extra trust in the yield nodes team to make sure they're going to be acting in a way that benefits the investors the most. The last con of this project, which is not really a risk, more just a pet peeve of mine, is that I can't actually toggle between euros and US dollars. So every time I need to go back and check my rewards or my profits, I have to put my investment through a conversion rate calculator to make sure I understand exactly how much money is going into the project. But I realize that affects me more than others because I live in America and our currency is US dollar, so not a big deal. I'm not leaving the project because of this, and it's not really even a red flag. Okay, let's talk about my strategy for yield nodes moving forward. I really like this project, and it seems like it's set up for a lot of long-term success. I really like that it's decoupled from the underlying tokens, and I'm not risking or burning my initial investment by putting it blindly into this project. However, because that 6-month lockup window exists, you can be put in a weird spot where you make your initial investment and then you can't get anything back out for 6 months. And so to balance that out, what I think I'm going to start doing is I'm going to continually make deposits on a monthly basis into Yield Notes. And that should allow me to have a rolling period of my 6-month windows expiring every month so that I can always take some of my money out without risking too much initial principal at one time being locked up for too long. This is crypto. Things can change in a heartbeat, so who knows exactly where things are going to be in 6 months from now. But I figured a strategy like this should allow me to reap a lot of the benefits while having the flexibility to cash out most of my investment whenever I need to. All right, how can you get set up with Yield Notes? Let me show you. I do have a link down in the description. Now, it is a big disclaimer, important for me to note that this is an affiliate link. So for every deposit that is made, I receive a 5% kickback. So if this video does really well and a lot of people sign up, great. But if not, no big deal. However, for now, I do plan on giving at least half of that affiliate money away to people in the community. And there are only 2 main rules. One is that you have to be someone that used my affiliate link to deposit into Yield Notes. And 2, you have to be subscribed to the channel. So if you haven't subbed yet, then well, I guess you probably just don't like money. That's cool. If you don't like money, no big deal, but you probably wouldn't be here if you didn't. So I know you like money, so why don't you go ahead and sub? And listen, if you want to use my link, awesome. If not, no big deal either. I'm not going to hard sell you on using my affiliate link, but I wanted to make sure I was very upfront and honest about it. So once you sign up for Yield Notes, you are going to have to go through their KYC compliance piece, and I recommend doing this first because it might take a day or 2 for that to get done. So the sooner you get this done, the sooner you can make your deposit. They do have an agreement that you need to sign. They also ask for photo identity as well as address proof. So just be prepared to have those things ready to go. You will receive an email letting you know that your KYC documents are verified, so you'll be ready to make a deposit. Once you've done that, you can come over here to the deposit tab and you can make your deposit. Now, you can enter the amount that you're going to deposit in euros, and it will tell you what that amount's going to be in Bitcoin so that you can send the right amount of Bitcoin over. If you're going to send Bitcoin, you click this button and it will generate a unique address for you that will automatically expire. So you can send money to this address to deposit into your account. You can also use Tether on the Tron network. Just make sure that if you're using Tether, you're actually using the Tron network. Or you can deposit in Bitcoin using any of these third-party apps here. I looked into each of these. I didn't use any of them. I ended up just sending from a Bitcoin wallet that I had. But these are really good options to have in case you wanted to use them. And you also receive email confirmation that your deposits are received. You'll notice here your deposit should be approved during the next 24 to 48 hours. And again, it's part of that 7-day grace period that they need to set everything up. Once your deposits are working, you can come to the dashboard. You can see everything that you have that's been master noded. Right now, I don't have anything that's withdrawable because I haven't been in the project for 6 months yet. That will become withdrawable once I hit that 6-month period. You can also go to your reports. You can see exactly how you're doing. So you can see here that each month weighted average noded balance is about 4,500 euros. My total net profit is 553 euros, and the principal I've invested is 3,200 euros. You can also see returns each month. So profits in January were 170 euros, profits in February were 382 euros, and it's nice that you can see this going along month over month. They make it really simple for you to see this. You can see in January that I have this little warning here that my profit for this period was lower than expected because of a late deposit, because I put money in after the 15th of January. So my initial deposit got the full January returns at 8%, but the rest of the deposit didn't get that full return. But you can see here, all of my money was in and working for the month of February, and I got the full 8.3% return on my investment. My friends, that is Yield Notes. While none of this is financial advice, and you should always do your own research, this is a project I am personally very excited about and really hopeful that this will help me in my passive income journey. If you like this video, you know what to do. Hit that button. If you like these types of videos, or you like my teaching style or how I break things down, go ahead, hit that subscribe button, and make sure to hit the little notification bell so that you're not just randomly stumbling across my videos, but you actually receive that alert and that notification every time I post, which is usually at least once per week. That's not too much, right? And this is good content, so once a week is a pretty good balance for you. Anyways, we've got some more videos coming out. We're working on a video on Titano. We're going to give you an update on how my passive income journey is going so far, and I'm really excited about some of the things to come. As always, if you like this video, let me know in the comments below. And if you didn't like this video, also let me know in the comments below. It is your feedback that is helping me get better with every single video. Last video, I got a really good piece of feedback that I beeped out a swear word, and that beep was way too loud and nearly broke someone's eardrum. So keep that shit coming. See what I did there? Anyways, as always, I wish you lots of learning and lots of earning. I'll see you in the next one.